Yeah.
Well, look, we've got 24 seconds to go before this market opens, and I confidently predict 24,000.
Cue the confetti.
We've got confetti.
Balloons.
I think we've got balloons.
Oh,
maybe trumpets. I'm not sure what we've got. There's 15 seconds to go, ladies and gentlemen. I'm sat dancing hard.
I'm excited.
Stand it.
There we now. Okay, so we've got the board up so you can see it. 7 seconds to go. This is a horse race, folks. This is going to be fun. I'm telling you. If you've got any stock at all, watch this now. Here we go. We're off. We're running. It is Thursday morning. Up there. There you go. We got it. Now we're up 88. 24,025. Away we go. Ladies and gentlemen, how about that? That is a gain of one.
The confetti. Oh.
Confetti was a bit late.
A little.
A little late on that, but we'll take it anyway.
We've blown the budget for next year.
We've crushed the budget for next year. Right, we're up 0.4% on the Dow Industrials. Show me quickly the S&P. We've got a similar gain, all-time high, up about 1/3 of 1%. The Nasdaq Composite, I'm pretty sure that's an all-time high. Yeah, up about 1/3 of 1%, 6,851. Oh, sorry, not quite an all-time high on the Nasdaq.
That's outrageous.
Took a big dip yesterday with the big tech stocks. That's what happened.
Give it time. Give it time.
All right, the aforementioned and the aforevoiced Ashley Webster and Liz McDonald, both with us this morning, along with John Layfield and Todd Horwitz. Okay, we got 24,000 on the Dow Industrials. We're up 106 points. Okay, John and Todd, you tell me, when do we hit 25,000? John, you're first.
That's one of the scariest things in the world to make a prediction. I predicted we hit 24,000 today. That's that much I can be certain of. I think 25,000. It all depends on tax cuts. If we get the tax cuts and we get the uncertainty taken out of the market, I think we move higher and we hit that 25,000 in a relatively short time. Remember that we're getting smaller now percentage-wise, so that's not that big a jump from 24 to 25.
All right, come on in, Todd, because I never know where you stand on these things. I know your mom's watching. I know all your relatives are watching. Are you going to tell me that we're about to crash or what? Go.
Good morning, sir. First of all, we should have brought out Frank Sinatra, Fly Me to the Moon. That would have been the first thing. I mean, we'll probably hit 25,000 maybe this year. You know, look, we're in funny money right now. We just keep going up, and you can't fight what's going on. It is going straight up. I don't understand why we don't talk about the debt and the other problems that are out there, but we keep going up, and I'm not going to get in front of it. However, I am waiting for an opportunity to sell it.
Okay, we hear you. Now, I really want to concentrate for a moment on the big-name technology companies. They've had a very rough week. They went down huge yesterday. They are bouncing back a little today. But here's the question for you, John. Is this a dip in the big tech stocks that you would buy?
John?
We lost John. Oh,
no.
That's a shame, you know, because in the past...
That's the budget thing. We lost the satellite money.
Yeah,
we spent it on the confetti.
We spent too much on confetti.
I knew it. I knew it.
Well, look at the big techs. Okay, here we go. Facebook is up 0.5%. Amazon is up 0.1%. It's only at 1164, way off its high of 1,200. Microsoft is up a little bit, 0.05%. That's not much of a bounce back. And Google has actually opened lower this morning. Apple just a fraction higher. John is back. Okay, John, I'll repeat the question. We've seen a huge drop in the big-name technology companies. In the past, it was a good idea to buy that dip. Is it a good idea to buy that dip today?
I think it is. Look, I already own a lot of the big-name tech companies, Google, Amazon, Facebook, Apple, so I'm not buying more right here, but I'm certainly not selling. The tech sector of the S&P was up almost 40% this year, compared to the S&P up about 20%. So it's doubled the growth of the S&P, and I don't see that abating anytime soon. Look, Amazon's revenue was up 35% this quarter. Google's profit was up 33% this quarter. You can't overestimate the benefit of tax cuts and repatriation for these big tech name companies. So yes, I think if you're investing for the long term, buying on the dip here is a wise move.
Very interesting. I want to specialize now, just focus in on Amazon for a moment. More news on Amazon happens all the time. We've got an analyst who says that Amazon may capture about 1/4 of all consumers' dollars spent online in America during this holiday season.
Think about that. 25% of everything bought online will go to Amazon. That, according to the analysts, could generate just in the fourth quarter $53.3 billion in sales for Amazon, which would be up, by the way, 33% year over year. And the other interesting thing is this analyst talks about their web service. We talk about this. This is a company that's dominating on the consumer end online. but is also dominating on the web services for businesses as well. That has generated the web service by Amazon, $17 billion this year is what they estimate. That is up 42% from the year before. Put this all together, and it's a behemoth.
And if you have Amazon Alexa for business,
yes,
I mean, that'll really pop it. I mean, Ashley's right. Amazon's cloud business papers over its red ink that it spills to expand its business. So, you know, this is a behemoth right now.
Totally. I mean, you run out of words to describe it. Juggernaut, behemoth, whatever you want to say.
Growing.
Todd, come on in. Are you calling Amazon stock price funny money?
Well, I think it's funny, but they're a great company. Look, they have one of the best business models. They have not only their own business, but they've got every small independent working with them, selling product in which they get paid off of. So what could be better than they don't even have to stock all of their gear nor ship it. So they're making money off of everybody else as well as it, and they put every little retailer out of business. I mean, we've got Walmart and Amazon left, basically.
They got 13,000 small businesses inside its umbrella.
Okay. And the stock right now is at $11.69, up $8. Now, let's have a look at the big one. Bullet up full screen here, because we're up 129 points. Often in the market, you will see a certain level hit, and then people sell. You arrive at 24,000 and people sell because that's their target price. Done. Trigger. Sell. That did not happen this morning. We hit 24,000 and powered beyond it. If some people sold, it doesn't show up in the overall average. Now we're up 120 points at 24,063. Real fast, I'm going to go through some individual stocks with news on them. Sales down at Jack in the Box, stock down 4%. Lazy Boy says the hurricanes, Northern California wildfires, raw material price increases all hurt their financial results. So what? The stock is up 4%. Cloud storage firm Box, they lost some money and the stock is up 26 cents. Powerful market. PVH, parent of Calvin Klein, Tommy Hilfiger, getting a nice boost. Sales up in Europe and China, but that stock is down 1.5%. Go figure. Barnes & Noble, they lost more money, reported sales that continued to decline. That stock is taking it on the chin. Barnes & Noble down 7%. Lower sales at the clothing retailer Express cut its forecast. Don't do that, but it's only down 3 cents. Better profit at Kroger. They slashed prices. Better profits, though, up 11% at Kroger. Good numbers at Michael's stores, up 16%. Look at Sears. That company lost less money. 24 quarters in a row they had falling sales, but they're going to go towards specialty stores selling just mattresses and appliances. Up she goes, 16% up on Sears. John, would you ever buy a single share of Sears?
No, as a kid who grew up with the Sears Roebuck catalog, this is heartbreaking to me. But once the dinosaur starts heading for the tar pit, it rarely ever comes back. They sold off some of the most profitable assets to raise money. Problem is they sold off some of the most profitable assets. It was a terribly mismanaged company. Unfortunately, this thing is headed to the tar pit, and we're not going to find it for a long time.
The dinosaur heading to the tar pit. Well, that's a colorful language, and I like it. All right. Look at American Airlines. They're facing a pilot shortage. Now, briefly, Liz, tell me more about this.
15,000 holiday flights won't have the pilot or the crew from December 17th to December 31st. A computer glitch gave time off to too many pilots in December. The glitch showed that American did have ample staffing coverage when they didn't. Major markets affected here: Dallas, Boston, New York, Philadelphia, Miami, Salt Lake, and others.
Right.
So, you know, they're trying to give them time and a half to get them back on the job to take care of these flights, but they're scrambling now.
And the stock is up $1. That will be over 2.5%, back up to $50 a share.
I love flying.
There's lots of things in this market I can't figure it out. Yeah, I love it, right. Chevy unveils a self-driving, all-electric Bolt. Therefore, John, come on in. Would you buy General Motors stock on the strength of its electric car business, which actually is doing very well?
I own General Motors stock mainly because of the dividend, but I love the electric car business as well. Look, I own a lithium ETF that has shares of Tesla. I own Intel, which has the AI that has the chips that go in the electric car. I think the electric car is the new way, especially with the lithium battery and what they can do with storage on a massive scale. So, yes, I'm a big bull on the entire lithium sector and the electric car.
Okay, Todd, would you buy General Motors at $44 a share?
I would. I mean, it's as John said, you buy it for the dividend. I don't expect it to go wild as like a Tesla or those other stocks, but certainly taking that dividend on a quarterly basis is a nice little payday back. And of course, if the stock stays steady, you're still getting 4 or 5% a year. So it's a pretty good deal for me.
4 or 5% works for me.
Yeah,
you know?
not bad.
Unless you're used to 30% in the stock market overall. Oh, there you go. And we've got a sidebar story here on tax cuts. AT&T, they've made a big promise if tax reform goes through. What's the promise?
It comes from Randall Stevenson, the CEO. He says, look, we get these tax cuts. That immediately will enable us to invest $1 billion, at least, he says, $1 billion, which he says will create 7,000 new jobs. And he calls them hard hat jobs. These are not low wage. These are 70 to 80,000 a year hard hat jobs, helping to rebuild infrastructure and build up their own infrastructure. AT&T, he says, all we need is that help on the tax end, and he believes that other companies will join suit.
I'm surprised that President Trump has not tweeted something about that.
That's true.
That's a hit.
I think he jumped on it.
But we have like
thing.
MSNBC hosts like Stephanie Ruhle saying, oh, companies are going to sit on their cash. Really?
Yeah.
How does she know?
That's what she said. Well, because her thoughts are facts. So.
It can be very nasty. That was good. That was good. We appreciate that. All right. Now, a totally different subject, but one of great interest to a lot of people. Bitcoin. Has that thing had a run up this year or what? Now, Todd, I don't know where you stand on Bitcoin. I've no clue, but you tell me, is Bitcoin a bubble?
Well, I think the chart is a bubble right now. I think that the overall price action, but I do believe that it's going to be a real asset class, and it's going to help replace or be a substitute for currency, much like gold or silver. I think that it's a real viable asset class that is going to be used. I own none, unfortunately. I wish I bought some, but at the end of the day, I think it's going to be a real currency. It's going to come into play, and many big investors are in fact, many of the not brokerage houses, but family offices and advisors are putting their clients in Bitcoin right now as a small investment. So I see no reason to believe that it will not be a real asset class, because it's a good way to transfer money without having to carry it, and you can get out of certain countries like China. Not carrying your gold, you can put your Bitcoin in your phone and walk out of the country. So I think it's going to be a real asset class.
Can you pay your tax bill in Bitcoin?
That's a good question.
But what Todd just said about taking money out, I mean, because it is anonymous, you got it, you can put it on your cell phone, walk out of China or any place else you want to go.
A huge advantage.
That is an advantage, and a lot of the demand for it has to be coming from China. That's very interesting.
And terrorist groups and drug traffickers.
Drug dealers, criminals, terrorist groups, they can all use it. Go ahead, Todd.
They mine 80% of the Bitcoin is mined in China. So what the point is that if you had $100,000 worth of gold, it'd be kind of hard to walk out of the country with that, right? It's a little bulky. So you got $100,000 worth of Bitcoin, you can walk right out.
Okay, maybe you just raise the market price of Bitcoin a little bit there, because I didn't know that. I personally wouldn't touch it with a 10-foot pole. Would you, Ash?
No.
Would you, Liz? No. There you go.
What do we know?
What do we know?
Hey, Todd and John, thank you very much for being with us on an historic day when we hit and maintained 24,000 on the Dow. Thank you, gentlemen. All right, let's have another look at it. Why not? We have indeed 24,056